You can go with the flow when it comes to investing. Continue to deal with the income outage of bonds. Or discover the power of dividends with higher-yielding sectors of the S&P 500, like utilities. XLU can transmit the benefits of equity income to your portfolio with liquidity, all-day tradability, and transparency. Ready to plug into a different source for income? Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for a prospectus containing this information. Read it carefully. Visit us at sectorspiders.com.
I'm Ron DeLegge. Welcome to another episode of Marketplace Minute. We're pleased to have with us JC Parets. He's the founder of Eagle Bay Capital, based in New York. Great to catch up with you, JC.
Thanks for having me.
You know, when you look at the stock market, one of the things you want to see for a strong and healthy bull market is participation by all facets of the market, not just large caps, but small caps and mid caps. Yeah. We haven't really seen that with this particular bull market. Talk about that.
Well, since 2009, we have seen strength out of the small caps and mid caps and things of that nature. This year, we've seen that change.
Right.
The money is flowing into the larger cap names, the Dow Jones Industrial Average, the NASDAQ 100 particularly, and even the S&P 500 is holding up better. Those are up a little bit on the year, but for the most part, stocks are down year to date. Look at the Russell 3000 down year to date.
Yes.
Small caps are down, micro caps are down. In fact, 2 weeks ago, the Russell 2000 hit new 52-week lows. So I would argue that indexes hitting new 52-week lows are not in a bull market. I think that's an indication that money is hiding in the large caps. I think there's more weakness to come as stocks overall.
Now let's talk about the bond market, which, you know, with the stocks at all-time highs, you know, this has been a forgotten story, sort of, in 2014. We've seen long-term bonds continue to rally, and of course the same message out of Wall Street, the bond bubble's going to burst, the bond bubble's going to burst. Hasn't happened.
Isn't it beautiful? So I love fading that Wall Street consensus. I love fading that economic consensus. You know, coming into 2014, 67 of 67 Wall Street economists that were polled all said interest rates were going higher, sell bonds. Guess what? We've had one of the best years in the history of the United States bond market, and we've been trading these guys for 200 years. So interest rates have fallen off a cliff. It's a beautiful thing. I mean, it's been one of the best trades for us this year. I love every second of it.
Yeah. One last thing before you take off. What about the commodities market? We've seen kind of textbook deflation, especially in the oil market. What does that portend for some of the other commodities? Is there any worries that you have about this deflationary action in the price of oil?
You know, in terms of the economic implications, I can't really speak in that behalf, but from a pure price and sentiment standpoint, anything in the energy-related areas, oil, natural gas, heating oil, all of these things, the sentiment is at extreme lows. In fact, unleaded gas and heating oil, in terms of sentiment, in terms of bearishness, we're at 12-year lows. So I think we're going to get some sort of snapback. I think it's coming soon, actually, and no one's really expecting it. So I think that's going to be very interesting. In terms of what we're seeing in the precious metal space, we're getting a little bit of a bounce recently, but we're in a multi-year downtrend bear market in precious metals, gold, silver specifically. They're making lower lows, lower highs. You know, call me crazy. That's a downtrend, and I think we continue lower. Probably see $1,000 in gold. Probably see 14, 15 bucks in silver.
You just heard from JC Parets, Eagle Bay Capital in New York City. I'm Ron DeLegge with ETFguide. Thanks for watching.